me this little red bar. Okay, everything should be legit now. There's no more red bar. I had this big red bar. Anytime you see a big red bar, you better assume S is effed up. Anyway, here we are, crypto and coffee, whatever the fuck we're doing. Hello to everyone, and let's get started. Bitcoin, $51,406. Cool, man. It's back up. People aren't stressing. They aren't panicking. Things look great. Ethereum, 16. It broke back in the 1600s. If you were paying attention, 2.5 days ago, it was in the 1300 range. Got down. I saw it as low as 1343. It might have dipped even lower. What a difference a few days makes, right? Cardano, $1.24. Over the weekend, it got up to $1.49 just for a second. But listen, it's only been 10 days that it's been over $1. So that's pretty cool. It's at its trending around its highs. I would say it's still somewhat in price discovery mode. We'll see. The Merry Hard Fork launched. Awesome, man. And just real quick, Baykeeper, SJO, Theta TV, Veritax, Hologram, Stress Relief, Cabeza de Termo, Pete Kelly, Philippe Trading, McNabb, Willie, Tommy Bernard, and Hologram, hello. And also a hello to Leroy. Hits NDC, Jimmy James, Scott Hill, Barno, Pete Kelly, Demayan, JJ, Scott Hill, Bitcorn, Candy, and Tom. Awesome. Whew. I think we pretty much did it. JR80. Got it. Great. DOT 3774. It's starting to make a little bit of a run again, pushing towards $40. XRP and XLM. Yawn. Atom Cosmos is up towards $20 again. It's kind of it jumped up into that range. It's been pretty quiet since then, but there you go. Theta, $3.80. Sony came on as a validator. Who knows what that means? Probably good in the long run, but we'll see. I'm not sure where Theta goes. I don't even know how to wrap my mind around where it should go. So I'm going to stay away from that. VeChain, it's pushing near 5 cents again, so that's kind of exciting. We'll see what happens. It's green, green, and green. Neo is above $40. That's pretty cool. Graph token is approaching $2 again. Also cool. Engine is kicking dicks.
Yes.
And for those of you that aren't looking, it's up 36 point, almost 37% on the day. It got as high as $1.30 today. We're going to be talking about Engine at length. IOST, 4 cents, still kind of grinding up, but I think we see a breakout in IOST when we see a greater breakout in the attention turns to protocol layer solutions. That argument will be made, but right now, all eyes on NFT space. One might even say we're approaching bubble status. It reminds me, there was a case in the Supreme Court where they were looking at what pornography is. And the question was, what is pornography? And the Supreme Court ruled, we don't know how to define pornography, but we know when we see it. Right? So we don't know what a bubble is exactly, but you know when you see it. And I feel like we're approaching that, but there's a lot of money to be made to bubble. You know, like the universe could be looked at as a bubble. There's the known universe, that's a bubble. What's beyond that? Well, more universe. And so if you play your cards right, I think there's a lot of money to be made. 1 inch. Great staking rewards, by the way. Anybody that's staking this thing, you're crushing it. It's been languishing in the $4 range, and it's also been near. Oddly, these two things are price tracking. They've been tracking for like weeks, and it's just kind of interesting. So we'll see. Bullish on both. Near protocol layer solution, still difficult to get, and the difficulty in obtaining these things is where a lot of the money is. A lot of the money that you think is left on the table, it's on there because it's difficult to get. If it were easy, everyone would do it. Before we get into NFTs, Leroy, what's going on in your life?
Man, just keeping an eye on the market and making a bunch of crazy moves over the last couple of days, including a pretty aggressive move into Engine, which I had already been in, and I just kind of beefed up my position a couple of days ago, which turned out to be a pretty massive bonanza. And otherwise, just been doing a really deep dive into this NFT space, and not just the NFTs themselves, but the underlying platforms that are used to mint the NFTs or create the NFTs, and everything around running NFT marketplaces, and just a lot of stuff about NFTs. So
this is a good first question, actually. Really interested to hear what you think about flow versus the cards themselves. The token has already taken off, while I could probably snag some packs, which may appreciate at a faster rate. So I bought packs, technically plural. I have bought plural packs, which is great. I did make a pretty good chunk of money off the first one, but it's not something that scales. And it doesn't scale because you can't just go buy hundreds of packs. You can buy hundreds of tokens. So let's talk a little bit about Flow. What got you, Leroy, what got you interested in Flow?
Coin alert. So yeah, so basically one day, I mean, that's how, I mean, obviously I never heard of Flow in my life. And one day I was just, you know, boom, Slack notification came in. I went in there, I saw Flow. I was like, what the hell is that? So I clicked off over there. And this is, you know, after, you know, I mean, obviously talking to you over the last few weeks, and you told me the story about you going buying, I believe, the NBA top pack and all this crazy stuff. And just been reading about, you know, Elon Musk's wife who just auctioned off some stuff, and this other auction that for this album that ran on Origin. And so NFTs have been in my head, and I've even gone to Google and banged around and, like, you know, what, you know, just all sorts of variations of search phrases, like, you know, NFT blockchain platforms, this and that, trying to find stuff. But, you know, until something moves, it's kind of hard to, you know, so that's obviously the whole reason why we built the app. And so anyway, I was sitting there one day and boom, a few little coins popped up, and one of them was Flow. And I was like, clicked out to it. And then, of course, you know, go to CoinMarketCap, click the website, and went over there, and sure as shit, boom, there's this NFT platform. And so, you know, at first, you know, I mean, again, my initial perception was, you know, really nice website, looks cool. Scrolling down, you know, first thing I always do is hit the team. I start looking all around for a team link, like team page. That's like the number one thing I want to see is who's the team, you know, because usually on the team you get the investors and all the other shit, the partnerships, pardon my French. And so I go to the team. So literally, like within 10 seconds after I hit the site, I go to the team page, and I see there that, you know, it's essentially, you know, Dapper Labs, which is the guys that created CryptoKitties, you know, obviously the guys that actually created NBA Top Shot. I mean, this is what everybody's talking about, NBA Top Shot. And so I'm like, holy shit, you know, Flow is the platform that is built by the guys that did CryptoKitties, that built NBA Top Shots, that built, you know, UFC collectibles, that did this Dr. Seuss thing, all this stuff, dude. I mean, these are the guys. And so I scrolled down to the investors, which I'm looking at the site right now. And if you go there, you'll see. And dude, I don't really know how you can have a more star-studded investor lineup. I mean, this is Coinbase Ventures, Andreessen Horowitz. I mean, everybody is there, you know, on the investor list. And I also noticed that the CTO, this guy Deet, is also the author of ERC 721. And so, I mean, if you know what ERC 721 is, he's the author of it. Okay. So this is like the NFT spec on Ethereum. Okay. And so I'm just like, all these different dots are kind of like coming together in my head. And I'm like, and another thing I noticed is that it's a layer one, which we've talked about layer ones and layer twos. And so Engine is amazing, but it's a layer two that runs on top of Ethereum. Ethereum is the layer one. It's a layer two, and you can still do a bunch of amazing stuff on, you know, on Engine. But, you know, Engine is heavily, and I'm not criticizing Engine. I mean, I have made more money than I care to mention right here on Engine in the last couple days. But, you know, Engine is an Ethereum based, it's an ERC20 token. And a lot of their marketing messaging and everything is heavily based around sort of gaming and virtual reality, which again is extremely important because, you know, I mean, we've had a whole generation of people that have grown up on games, you know, and we have the whole World Wide Web that's and everything that's moving more towards virtual reality and everything. So the whole concept of introducing sort of economies and financial systems inside of these games and being able to buy digital assets. And eventually when you're done with this game, you can sell it back and get some currency, move over into another game, buy you some more stuff, or maybe even take assets with you from game to game if they're sort of interoperable. This is important. And so you obviously Engine is partnered up with Microsoft, which obviously everybody knows makes Xbox and just does a whole bunch of gaming stuff. And so, you know, they've started integrating Engine into Minecraft, which is one of the things that caused this most recent pop. But I mean, Engine is amazing. But what's even more amazing is the very first and only layer one blockchain platform specifically designed for NFTs, built by the guys that built CryptoKitties, NBA Top Shots, all this stuff. And so with all these backers, and so it just blew my mind. And so I immediately started scrambling around, and as you know, I just completely dumped one of my positions and was kind of lobbing around some Bitcoin like a football, trying from one exchange to another, trying to figure out how to get into it. And I wound up losing a little bit of money with all this moving stuff around. And then eventually I jumped back into the coin that I got out of, and it wound up kind of moving around, and I lost a little money on that, which I've completely made back up because I moved all that into Engine after that. But long story short is Engine is a layer two NFT sort of platform that is designed to allow you to, specific. I mean, and they're doing a lot of stuff with real estate and other stuff, but sort of like the initial vision of it and kind of where most of the marketing messaging is around like games, okay, and virtual reality, and Flow is a layer 1. And I mean, as you know, if you look at the top 10 cryptos on CoinMarketCap, I mean, they're all mostly layer 1s. I mean, these layer 1s like Cardano, I mean, these things, there's really no top. I mean, we're talking about coins that can go to 20, 30, 50, 100 billion or more. And so at this point, most of the exchanges are not allowing U.S. investors to buy it. I mean, as you know, we've just done everything known to man to try to buy it, and finally figured out how to buy it, but took a little bit of finagling. But basically that's kind of
to be fair, why we're dancing around this is we have to be very careful that we're not giving you guys advice. And we pulled some shenanigans to get into some of these assets that one, we don't want you guys doing stuff and not understanding maybe how dangerous it is, and then nuking your currency out into the ecosystem of space rather than into another wallet. So we're just trying to keep you guys careful. So just be careful.
Some of the last couple things about Flow, the important thing is we always like to try to, the more illiquid or the more difficult it is to get something, especially when it has when it's really this amazing. I mean, the team is this amazing, the investors, just the traction. I mean, things are actually up and running on it and all this stuff. And yet it's, Coinbase Ventures is behind it. So, they're eventually going to list it, but U.S. investors can't get it anywhere. I mean, obviously, where is most of the money in this world? In the United States. So if U.S. investors can't get it and it's not on Coinbase, most importantly, U.S. investors can't get it, then, the reality of it is whenever that door opens and the U.S. investors can get it, we already know what's going to happen to the price. And so nice to get right now if you can.
So let me ask you this. This is a good question. Sylvia asks, would you be able to walk us through how to use Coin Alert to be able to find trades like Engine? So what would you recommend?
Yeah, so that particular coin popped up on as well as Engine and Graph and 1inch and Near and just pretty much every single thing that we're in other than Bitcoin and Cardano, I would think probably was the top gainer. So when you set up your Coin Alert account, you go and create a market alert. Up at the top, there's a drop down list box that has templates in it, and there's one template in there called Top Gainer, and that basically just finds any coin with a market cap of 100 million or higher that has had a price increase of 25% or more in the last 24 hours. And every hour or whatever the frequency is, depending on what plan you're on, it'll send you an email or it'll post a notification to Slack and give you a list of those coins. And so the whole idea is, it's okay to miss the first 25% run once it's above 100 million. We that particular template weeds out anything less than 100 million market cap because most of those are just too young to really know what they're going to do. But once it gets up to 100 million market cap, if it runs by 25%, let us know. We want to see it. And so that's the Top Gainer template in Coin Alert, and you create a market alert and select top gainers. And that's pretty much how we find most of this stuff. I mean, there's lots of other templates in there, but definitely the most important one is the Top Gainer alert.
And one thing I like about it too, even if I'm not making moves, because I don't react to a lot of these alerts. What I like is the net effect of the information I'm getting. If you're seeing what the market's doing in real time and you're seeing where people are pouring currency into, then that's telling you a lot about the pulse of the market. And you don't have to react to it. That might make you do some other things on the other side of your balance sheet, some other little balancing operations and things like that. It may tell you, hey, it's time to look at some of the tokens that have run and see if there's better places I could scrape some of that profit off of that might have higher velocity versus some of these tokens that might have had their run and start to slow down. And so comparing, I'll keep 4 or 5 of the emails in a row and I'll go current one, and then I'll go back an hour, back an hour, and I'll see what's joining the list and what's leaving the list. Yep. And this gives me an idea.
Yeah, I don't necessarily. I mean, every time they come in, I like for them to come in every hour because some stuff might show up and then it might be there for an hour or two and then disappear. And I don't necessarily even every time it comes in, I don't go look, and then it comes in again and go look because I don't want to be interrupted all day. But sometimes it may be a couple times a day, or it might be even once a day. I'll go and I'll just kind of quick scan through all the stuff that kind of came through, and I might just be sitting there all of a sudden and thinking, I wonder what coins I should go research. And so instead of me just going and whacking around on Google and trying to find something, it's just easy to kind of go and skim through those emails or skim through the Slack notifications if you're using Slack. And, and that's where you get the ideas. This is stuff that actually moved. It's above, 100 million market cap. And it just kind of gives you some starting point to go out and do the research.
So here's another question, Leroy. Is there, and this is from Veritax over on Theta TV, is there a way on Coin Alert to make some alerts 24 hours instead of an hourly if you are premium?
Yeah, somebody asked for that feature, and I've just been kind of slammed with a couple things, but I am going to add that in the Discord. I'm adding a Discord bot and a few other things, but I will actually add some scheduling on there where you can say, I only want this every hour, or I want this every hour, every 4 hours, once a day, whatever, and I'll make sure I get that out here sometime in the next week or so.
Cool. So yeah, Veritax, thanks for that question. Let me also say hello to Dogecoin to $1, Cassandra, BP Brother, Sniper Princess, don't ever piss her off, J Ben, D Brant, Double Up God, Hits NDC, Spirella, Gatomi, TS Monkey, Constantino, what's going on, buddy? Mark, what's up? Cassandra, what's up? V Relu, what's up? Expat Matt, what up? Okay, I think I got all the what ups in. All the what ups are in. Let me see if there's any what ups over here. Oh, we've got Nick, Kenny, Denise, Joshua, Aldo, Lori, and Matthew. Some more what ups over in Clubhouse. This is cool. All right. There we go. What up? Lots of what ups. Skeptical Pooh asks, that's a funny name. How do you buy in the US? I was trying to buy 2 days ago. You can't, as far as I understand, you can't buy flow in the US right now. Some people, depending on where you're at, can use gate.io. I can use it. Leroy cannot use it. It's weird. It may have to do with California residents versus Texas residents, and some kind of regional, jurisdictional nonsensicalness. Other than that, we're not really sure. We just bang around and we find a way. If you want to make money in the crypto space and not have to be fumbling in or out of these assets with everybody else, you really have to kind of slow down, be willing to just do some deep research and just keep banging away until you find a place to do it. And then if you think you found a way in, make a tiny, tiny little purchase.
Yeah, right? and if you really, really need these hard answers, join us in Discord and we can talk about it. That's probably
Join the Discord. You can go to cryptoandcoffee.tv, click the Discord. It'll send you an invite, jump in, and they talk about a lot of very in the weeds, very kind of specific things that might help a lot of you, but not all of that is appropriate for the videos. All right. Let's move on. Let's go talk a little bit about NFTs. And this is the same argument you've heard over and over. Do I buy the protocol or do I buy the milk or do I buy the cow? Do I buy dApps or do I buy Ethereum? Do I buy native assets that are launching on Cardano or do I buy Cardano? Do I buy parachains that are coming on DOT or do I buy DOT? So that's kind of an argument that goes back and forth. What are your thoughts, Leroy? I mean, what would you tell someone coming into the space? I want to get exposure. I'm looking at NFTs, but it might be a bubble. Where does your brain go?
Well, my whole approach is, and it's everybody's got their own personal life experience and the things they enjoy doing. And I'm just not really a collector of anything other than money. And so I just can't really see.
I collect many leather-bound money.
So I can't really see myself, paying thousands of dollars for a video or a picture or anything like that. I mean, again,
what about a 6-second jump shot?
Or somebody knocked out of the ring or something like that
from a random game.
But again, I mean, everybody, different strokes for different folks, but it's interesting to see that humans are actually willing to pay those kinds of money for albums and pictures and videos and things like that. And so my whole philosophy is, again, it goes back to your whole picks and shovels thing. I'm more interested in buying the fungible because, we hear NFTs, but we don't ever hear FTs. And that's really what this is all about. Fungible tokens and non-fungible tokens. And that's really what those are called. And a fungible token is an interchangeable token. It's kind of like, if I loan Nick, $100, and he comes back next week and hands me the $100 bill back, I'm not going to look at the serial number and say, that's not the same $100 bill I gave you. It doesn't matter. It doesn't matter. $100 bill is $100 bill, and it doesn't have to be the exact same one that I gave you. And that's a fungible sort of commodity or object. And non-fungible, which is like non-replaceable, is if I give him the dollar bill and I say, I want that exact one back, and I'm going to check the serial number when you give it back to me. And so, like the typical tokens you're used to, and I know most of you may already know about this, is essentially fungible tokens, Bitcoin, Ethereum, whatever, Lumens, all this stuff. Those are fungible tokens. And non-fungible tokens are like unique, identifiable, authenticatable, or whatever the word is, and everyone is unique. And so this is kind of the newest thing. Fungible crypto tokens have been like the big thing up till now, and now there's new standard for doing non-fungibles. And so I'm more interested in the underlying platforms that are being used to create non-fungible tokens, and less interested in the actual non-fungible tokens themselves, because it's kind of, in my opinion, if you can do some really deep fundamental research on a NFT platform that actually is used to create NFTs and create auction platforms and marketplaces where these NFTs can be traded. And I mean, if you see the founders, the investors, the this, the that, the market cap, you can do a bunch of mathematical and quantitative analysis on this thing. And you can see, it's pretty likely that the token for this underlying platform is going to grow based on all these fundamentals. But when you're dealing with an NFT, I mean, how am I supposed to know whether Larry Bird or Michael Jordan's slam dunk is going to be, have a bigger price, or, like if the guy hitting, I have no idea how to even value these things. I mean, some of this stuff with the NFTs is so subjective, it's like, it's hard to figure out, like predict, what the value is going to be a year or two from now for some particular NFT pack or some little moment inside of an NFT pack. So I just tend to stay away from things that I can't do a lot of quantitative analysis on, and focus more on the underlying platforms that people are using to generate these NFTs and run marketplaces and things like that. And that's just my whole approach.
Yeah, I think was it yesterday or the day before that the Pepe Homer Simpson, which is this poorly drawn piece of shit, it just sold for like 205 Ethereum.
Damn.
And the guy that bought it in 2018 bought it for like, I don't know, $60,000. And he was like, see, you guys said I was dumb. Yeah. Well, no, I still think you're dumb. I just think you found someone dumber.
Yeah. It's really hard to predict where the value of those things are going. And I think
you said it, Leroy, when you said it's very tough to do meaningful research. You can't do fundamental research.
Exactly. Yeah. Yeah. No, I agree. So, yeah, I mean, and if you're highly trained in some particular sort of area within like collectibles and things like that, maybe obviously you got a better eye for it and you'll know value better. But for people like most of us who are just coming into this and we're trying to, we're not like professional collectors and things like that, and we don't really know how to actually, appraise the value of these things. You're probably safer just investing in the fungible token for the underlying platform instead of the NFT itself.
Okay, so tell us a little bit then, if we're talking flow and we're talking engine, let's just assume that for now, it's difficult to get flow, but because it's difficult to get flow, there is a little bit of baked in, free premium, right? The way I see it, because it's difficult, because it's not easy, because you can't flip open Coinbase and snatch it up, there's some premium on the table for those who are willing to kind of, dare into that, kind of forage into that process. With engine, which is pretty readily available, what are you thinking over the next, let's say 6 months? Let's assume that this is a bubble, and that
I
don't think the NFT space is a bubble. I think the pricing of these early pieces of artwork and music is probably bubbly.
I guess I just think some of these words get so weird and kind of, when you talk about bubbles, it's just, so again, I do believe there's a lot of euphoria and irrational sort of, to use Alan Greenspan's sort of wording, irrational exuberance when it comes to like the NFT packs and the actual NFTs. I mean, I asked my wife the other day, like, I wonder if any of the videos that are in these packs are actually on YouTube. So I don't even understand, I just don't get it. And I do believe, again, maybe it's just because I'm not a collector. I mean, there's a lot of things I don't get. But so I do believe that a lot of this stuff on the actual NFT buying side is could be described as, a bubble or irrational exuberance or whatever you want to say. I don't necessarily believe that the price run up on tokens like Engine is a bubble, because I mean, dude, there is very, very, lucrative partnerships being put in place between, say, Engine and, damn near $1 trillion companies that have many billions of dollars in revenue coming in from games. It's clear from Fortnite and all kinds of other games that sort of financial systems inside of games are really lucrative. And so, and I don't think that's, I think it's been done here and there, kind of like, helter skelter kind of thing, but it's never really been, there's never really been some unified sort of economy or financial system connecting together, even all the games in a single type of platform, like say all the Xbox games or all the PlayStation games or whatever. And you get to the point where you're bridging these games across each other, and you can kind of have, so I do believe that, again, investing in the fungible token for the underlying platform and understanding the just huge billions and billions of dollars in money that's being spent, on these little game cards to go to the PlayStation store and all this kind of stuff. I don't think that's a bubble at all. I can easily see Engine becoming, you think about it. You look at Microsoft. What is that? Look at the market cap on that thing. It's like what? Hundreds of billions. Okay. And you look at something like Engine that just cracked $1 billion market cap. That's like, I can easily see that token being, 5 years from now, easily 50 billion. Maybe even 100 billion if the market's big enough to support it. You know what I mean? So yeah, I don't think that aspect of it, the underlying platform and that aspect of it, is a bubble. I do believe that at some point, people, people still spend millions of dollars on art pieces in museums. So you really have no idea what's going to happen with the NFT side of it itself. But no, I think all this stuff is important, dude. You've had all kinds of problems with digital rights management and just all kinds of stuff over the years. And I think there's a chance for NFTs to solve a lot of those problems. But, yeah, who the hell knows? One thing's for sure, there is a lot of irrational exuberance in the NFT space.
So the way I see it is these are two different things happening. I believe that the highways and the railways and the fundamental infrastructure is undervalued. Yeah. Because everybody's been going after moments and cards and collectibles. And that's actually the very first, just the edge case for non-fungible tokens. They can be applied to contracts. They can be applied to equity. They can be applied all throughout the world in all of these specific use cases where it makes sense to have one specific unique digital asset assigned to a real world asset or piece of intellectual property. And you could and you can do all sorts of crazy things. So I think this is just the edge case. It makes a lot of sense to a lot of people, and people are rushing in. But I think people are rushing in to the mine, and they're looking to find the next piece of gold, and they're trading gold to each other as fast as they can. And then you have the picks and shovel play. You have the infrastructure play, where I want to be the one building the railway that all of these degenerates are running back and forth on.
Like you.
So, yeah, like me. That's right. But what I found is, collecting is very difficult. One, because again, it's hard to quantify what's valuable. If you find one other person that a piece of artwork is valuable to, and you sell it to them, well, you can't argue that you made money off that. That's a good trade. But is that a repeatable, scalable process? Probably not. Yeah. If one person bought all the NBA Top Shots and just held them in their back pocket and slowly meted them out, there would just be NBA Top Shots 2 would launch and they would compete with them. And then, right. And so I think that's what we're going to see is all of this competition, and all of that early investment money is going to start to spread out. And it's going to there's going to be a lot of chasing the next best thing. But at some point, people turn their attention back to the protocol.
Yeah. So yeah, the moral to the story is if you're trying to get some exposure to NFTs and you don't know where to start and you don't have much experience with collectibles, or, basically really truly refined sort of senses when it comes to appraising artwork or this kind of thing or that, then consider, taking a deeper look at some of the underlying platforms that are being used to essentially create these NFTs and create marketplaces around the NFTs. And the three biggest ones that I can think of right now there's actually quite a few of them, but but definitely the biggest one, obviously by far, is Engine. And also one that most people are not aware of that is actually probably going to play a big role in this NFT space on the marketplace side is Origin Protocol. And so there was an auction the other day run on Origin Protocol, and these guys have D-Shop, which is kind of like a little competitor to Shopify, but their vision for Origin is like much broader than that, where you can literally build out entire marketplaces, whether they're C2C or, Uber style kind of stuff, Airbnb, eBay, all kinds of marketplaces like that on Origin Protocol. And Origin is still extremely young. I mean, I think it's still pretty low. I mean, maybe 300 million market cap. And I mean, even Brave, for instance, I mean, the Brave browser and BAT, if you go look at their swag store, they run on Origin. I mean, Origin is like Shopify, but for, decentralized platforms and crypto apps. And so you can easily like connect it up to PayPal and Stripe, but you can also accept cryptocurrency payments through it. It's beautiful, runs fast. And so keep an eye on Origin Protocol. And obviously, Engine, and whenever Flow becomes available, Flow. Lost your audio there. You're muted.
Yeah, I'm going to throw the plug out there. NFTs will be launching here any moment on Cardano. So native assets went live. People are already launching assets like a bunch of idiots, just domain squatting, doing all sorts of stupid stuff. But once all those people are done doing all that stupid stuff, we're just, I think, a week or two away from NFTs being able to be fired off against Cardano, as well as their stable coins, some other stuff. So I think they'll have NFT functionality on all of these protocol layers. I imagine Near, I imagine Cosmos, I imagine DOT, Cardano, all of them, because everybody wants a piece of that market. And then I think that market expands outward in a very interesting way. So buying protocol layer exposure probably gets you exposure to all of these kind of markets, but the early easy way is probably Engine and Flow, and then to an extent Origin. Okay, let's talk a little bit. Let's go a little bit off of the NFT side of things and focus more on how much of your portfolio should it represent. So where would you put this? Would you put NFT exposure as like one of those tier one assets like Bitcoin, or do you put this in that kind of maybe further down on the list, like kind of 5% exposure, 10% exposure? What's your gut feeling, Leroy?
I mean, I have my own way of doing stuff with my portfolio, as you know me, and you talk about it, usually multiple times a day. So obviously Bitcoin is a very big piece of my portfolio. I mean, usually approaching half, and then whenever it gets kind of retarded because the altcoins take off, I rebalance and make sure I stay, pretty close to 40 to 50% Bitcoin. And then otherwise, I do early stage altcoin bets. That's just the way I do it. And I usually kind of think about the various sectors within there. So, DEXs is a big piece, big sort of focus for me. Layer ones, just really general purpose layer ones like Ethereum or Cardano or DOT or Near. And so for me, my biggest general purpose layer one bet right now is Near. And then, I didn't even realize until a couple of days ago that there's actually, sort of a special purpose layer one, which is, Flow. But for me, right now, NFTs represent probably about, I don't know, I would say somewhere in the neighborhood of 20% of my portfolio right now. And I'm actually increasing that a little bit. So it's a pretty sizable amount. I mean, I do believe that that's how big layer ones are for me, that I decided to put, when I'm done, after I make my next few moves, it will probably be closer to, 25 to maybe even 30% of my portfolio in NFTs. Yeah. Maybe 20%.
So then that would definitely, it would be at least half of your total infrastructure layer kind of exposure.
No, what happened was I went into Engine, and then it blew up so fast it's kind of retarded my portfolio right now. So I probably will rebalance some things. I've considered taking some of the Engine and putting it into Flow when it's available or whatever. I'm not going to let NFTs come to dominate my portfolio that much, but I can definitely see it being 15 to 20% of my portfolio, put it that way, after some rebalancing and stuff,
So that's a good question. Let's talk about rebalancing a second. So when people are looking at their portfolio and they're saying, wow, I'm up here, I'm down here, I'm sideways. Rebalancing doesn't just mean scraping off your winners. You have to dump losers. And this is the part that I think a lot of people don't like doing. They're waiting for that next big bump. They're waiting for it to move, and they won't cut loose I mean, I think that maybe even the Dunning-Kruger effect and cognitive bias is they're just not willing to cut loose their losers. But it's the exact same thing, right? You can't just scalp your winners. So how do you make the decision to cut loose a loser, Leroy?
A lot of times whether I'm willing to sit around and wait on something to take off or not has a lot to do with what I find when I'm doing my research. I mean, if I find something, just completely obvious, like say, again, Flow would be a good example. Near has been a good example, based on just the investors, the elegance of the developer documentation and the whole approach to building things on top of it. If it's a layer 1 or some kind of development based layer 2, like say Graph, then maybe I'll be a little bit patient. But I mean, a lot of times I dash in and out of stuff. I mean, you've already seen me do that a few times. I mean, I'll get into it and I'll kind of ride with it for a week or so. And if it goes down and it comes back up, and again, I don't recommend people do this, but I do it. I mean, if it goes down and I'm at a loss and then it comes back up, and then it kind of, it just seems like it's not going anywhere, I'll get out of it and get into something else. And sometimes I'll come back to it, maybe even at a slightly higher price. So I don't really know how to give any kind of yardstick as to when it's time to cut loose. I mean, but yeah, I mean, dude, you definitely have to know when to hold them and when to fold them. And if you're holding on to something, I would say be quick on the trigger. And if you see it start sliding really bad, don't wait months until you've lost half your money before you just get out of it. I don't really have any kind of formula for it, man. I mean, some of this stuff just traces down to gut and experience and having lost money a few times, and you kind of just generate, you develop instincts around, when to get out of something. And so, I mean, I don't let things run sideways too long. Literally, like if something runs sideways for a while, I think the only thing I've held that's run sideways for damn near my entire life is Dogecoin. And I've still got a big ass pile of that. But other than that, I usually, if it runs sideways too long, I get out. If it goes down, I definitely will never let anything go down more than, probably, unless the whole market is going into a correction, and then at that point it's kind of understandable. But if everything else is kind of doing good or running sideways and you see this one thing that's just kind of going down, I would just, I don't have any particular percentage, but usually no more than 15 to 20%, I'm out. And, and I'm usually always researching ahead and figure out what my next move is. So usually if I get out, I kind of already know what I'm getting ready to go into to try to make that back up. That's another important piece is, stay ahead and kind of constantly research coins and figure out if I had another 10 or 15,000 or whatever right now, what would I put it in? And so if you do decide to bail out of something, you kind of know what you want to go into, but there's no formula for it, as you know, dude. I mean, you gotta develop instincts around knowing when you want to cut your losses and move on, and because it's easy to lose money if you don't.
If tokens were girlfriends, the way I look at it is, if you find her pilfering your wallet, maybe one time you let her make it. The second time, you have to take her head off with a samurai sword. Damn. Right? And so if it's just like over and over, if you're looking at these tokens and they just keep bleeding and bleeding, and you realize that you have other projects where it's going the other way, or it's at least holding its ground, you have to dump your losers. Just don't be emotional about this stuff. And what you may do to make it more palatable is don't cut the whole thing. Take 50, 60, 75% of it, keep some stash in case it moons.
Yeah.
And then put it into a higher velocity asset.
Yeah.
Because
that's a good point. A lot of times whenever I am trying to cut a loser, I don't bail completely out of the position, because it seems like every time I do, then it goes up. So a lot of times I'll basically, I'll just take half out and move it into something else, and then just give the other half a little bit of time or whatever. But
for those of you that don't know what the Leroy index is, that is anytime Leroy sells something, you should buy it.
Buy it, because everything goes up right after I sell it. No, it really doesn't. It really doesn't. My batting average is pretty good, but it does seem like that in crypto for a lot of times. You'll wait, and then when you finally sell it, the damn thing goes up. But yeah.
I wonder if there's just some kind of mass capitulation. You're always waiting, like, when is the last shoe going to drop, right? Finally, you just give up. You're like, that's it. This thing is hopeless. I'm out. And everybody has agreed it's out. There's no more sellers. You're like the last seller. So I guess it's good. It means you held out as long as you could, but I guess it's bad because you didn't hold out one more hour. Anyway, it is what it is. Okay. And let's go up to 10,000 feet and let's just talk Bitcoin as we kind of finish off today's broadcast. Your thoughts on Bitcoin? 4 days ago, it was 43 grand and everybody was crying again. And dear God, it's all over. It's going to the 20s. It's going to the 10. Tone Vays was calling for 6,000 again, whatever. So yeah, that hasn't happened. So has the macro story changed at all for you, Leroy? I mean, has the world decided that nope, maybe Bitcoin isn't what we thought?
No, it never has, and it never will. I mean, I do, again, I believe these corrections are healthy, and they have to happen from time to time to kind of help everybody recalibrate and, understand that, I mean, nothing, the kind of gains that you see sometimes over a course of 2 or 3 weeks are not sustainable over the long term. But no, I mean, I see plenty of positive signs. I mean, you see that some of these bigger companies, the institutional buyers like, MicroStrategy, I believe, and a handful of other ones, Square and so on, basically scooped up enormous amounts of Bitcoin during that correction, which is always a good sign. And I mean, I think we're just coming out of a correction. I mean, it does look like, I would probably project that Bitcoin has some pretty good support around $50, $50,000, and just again, you never know. I mean, Bitcoin is pretty damn unpredictable, but my best guess is after a brutal correction that bad that went, ran it all the way down to 43,000 and then took a while to kind of get back up to 50, kind of stayed below 50 for a while and then finally struggled through and then actually pulled back again under 50 and then finally came through and kind of pretty strong and broke up to 52. I mean, it seems to me just based on sort of, history that it's likely that we're going to kind of bounce around either, slightly above or at 50 or potentially even, break up. But I don't think we're heading back down, That's my belief. Lost you again.
Does this to you look a little bit like, because to me it feels like we're getting into these, I don't want to say it's pattern of retracement and advance, but it feels a lot like it did when we went up to 42K. We broke back down to about 30K. Remember, everybody was like, oh my God. Matter of fact, it even got into like 29, 28 for a few minutes.
Yeah.
And then it melted up. It went into the mid 30s again. Then you had the Musk news. Poosh. It cracked up to 37, 38 again, pushed through. Then it banged its way all the way. Now, that was about a 2-week cycle. It banged its way up over the next few days. It went all the way to 48. This is 2 weeks, a week and a half ago. 58,000 and 58,330. Everybody's like, oh my God, this is crazy. And then it got crushed back down. People got irrational again. People started taking on leverage, all the things that you do. People were taking on immense leverage. The funding rate got really high. And remember, that funding rate is charged every 8 hours. So if you are long with leverage, you're getting dinged every 8 hours. Bang, 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 bang. And over 7 days, that equates, those high funding rates were equating to like between 3 and 4%. And when you're looking at your whole portfolio and you're getting milked for 3 or 4%, and you're at the end of a run, you don't know when you're at the end, but that is an extremely expensive proposition if you're on leverage. And when that unwinds, it unwinds with leverage. If you have 100x leverage and the price drops by 1%, you have zero. You've been liquidated. And so there's that middle range of people that are trying to bet, when does this thing bottom out? And until all those guys get liquidated, we don't really truly have a bottom. And so you went from 58 back down to 40-ish. And then it kind of languished around like 43, 44-ish. And now here we are, we're climbing back up again. My guess is over the next 2 weeks, my gut says we bang right through 60K. But no one knows. If they knew, they'd have all the money. And we don't have all the money, not yet anyway. Anyway, that's where we're at. Final thoughts, Leroy. What's going on in your world?
No final thoughts, man. I mean, just been really enjoying seeing things recover a little bit. I mean, that's that's about it, man. I mean, it's really enjoying a lot of the stuff developing around NFTs. Obviously, that's what this talk was about. And but yeah, I mean, most importantly, just happy to see the market. It really does seem to be that we're in a rebound here, and so just happy to see that.
All right. Well, this was a fun one. Be careful with your money. Don't make any irrational decisions. I mean, the whole crypto space could be looked at as marginally irrational, but try to be sensible in this extremely illiquid space with illiquid assets on illiquid exchanges. Just just slow down. Almost always the best thing to do is slow down. Just do a little bit extra research. Take your time. Don't fat thumb something. Don't trade on your phone. Trade on your computer or your laptop or your desktop. You just don't want to risk putting a decimal in the wrong place. Limit orders get filled wherever you put them. So if you miss a decimal or you add a decimal, you're going to pay the piper. So just be very careful. And on that, I will say, please don't do anything that my poor, insolvent, strung out on heroin, crack, and meth grandmother wouldn't do. And she's got that Cool Whip again, which I guess is like the gas that's at the end of the cream mixed with crack.